Hello everyone. Through this video, we will understand the provisions applicable to reverse charge mechanism, which is also known as RCM. So before we go for the concept of reverse charge, we must understand what is forward charge. Forward charge or normal charge is governed by Section 9, subsection 1 of CGST Act 2017 or Section 5, subsection 1 of IGST Act 2017. CGST Act deals with the intrastate supplies and IGST Act deals with the interstate supplies. The provisions contained in Section 9, subsection 1 are similar to that of Section 5, subsection 1. So we focus our attention on Section 9, subsection 1 while taking the examples. So let us presume that in our case, the supplier is Khanna Manufacturers, located in Delhi, and the recipient, for example, is Kanika Enterprises, and also located in Delhi. So we are taking the example of intrastate supplies. So this supplier, Khanna Manufacturer, supplies either goods or services or both to the recipient, Kanika Enterprises. So we take the example of supply of goods for time being. And the goods worth rupees 10,000 have been supplied to Kanika Enterprises, on which let us assume that the rate of tax is 5%. So the payment will be made by Kanika Enterprises to the supplier. So the amount will be 10,000, which is the payment in respect of the worth of goods, plus the tax. And tax will be 250, that is 2.5% as CGST, 2.5% of the worth of goods, plus 250 as the SGST. So the total becomes 10500. Okay, so this includes two components. One is the payment in respect of goods, or we may call it selling price. And the other one is the component of tax, which is GST. So this 10,000 rupees is retained by the supplier, and 500 rupees in respect of CGST and SGST are deposited with the government by the supplier. That is what happens in the case of forward charge. So when supplier is making the supply of goods to the recipient, and under forward charge, the invoice or the tax invoice will be raised, which will include the amount of the value of goods and also the amount of tax. So the tax is being borne by the recipient of goods and is paid by the supplier of goods to the government. In other words, we can say that the recipient is bearing the burden of the tax on such goods, and this tax amount is paid by the recipient to the supplier. Then it is the responsibility of the supplier or liability of the supplier to deposit this tax with the government. This is what happens in the case of forward charge. And this is a normal charge. This is what we see in most of these situations. However, in case of reverse charge, opposite happens. Let us see what. In the case of reverse charge, Section 9, subsection 3 and Section 9, subsection 4 of CGST Act 2017 are applicable, or Section 5, subsection 3 and subsection 5, subsection 4 of IGST Act 2017 are applicable. So these two sections contain almost similar provisions, so we focus our attention on section 9 subsection 3 and section 9 subsection 4. So we take the example of a reverse charge here. We still have assumed that the supplier is located in Delhi and the name is Khanna Manufacturers, and the recipient is Kanika Enterprises, again located in Delhi. So the supplier is making the supply of goods to Kanika Enterprises on which RCM is applicable. In other words, such supply of goods fetch reverse charge. Now this payment of 10,000 rupees has to be made, which is the worth of the goods. The recipient will make the payment of 10,000 rupees to the supplier, which you may call the selling price or you may call the worth of the goods, which is paid to the supplier. And the rate of tax applicable on such supply of goods is, again, we are assuming that it is 5%. So 250 in respect of CGST and 250 in respect of SGST. So the total becomes 500. So the amount of 500 under reverse charge will be borne by the recipient and will be deposited by the recipient to the government. In the previous case, under the forward charge, we saw that this 500 was paid or borne by the recipient and was paid to the supplier. The supplier deposited this amount to the government. Under reverse charge, opposite happens and the recipient himself deposits this amount with the government. In simple words, under forward charge, supplier is the taxable person and deposits the tax with the government. And under reverse charge, recipient is the taxable person and the recipient deposits the tax with the government. Thank you.